WILLIE, 2 key events will unleash gold. Timber. That is the standard cry in the forest industry among loggers who cut down giant trees, the warning to step aside for the great impact. Get ready for the simultaneous banking crisis in the 3 biggest European economies, Germany, France, Italy. The United States and the London Centre will not be able to avoid the crisis. Try that again. Timber. An event of monumental importance and impact is on the verge of occurrence. The largest bank in Europe is Deutsche Bank. Its credit default swap is rising in cost, while its stock price has entered single digits in a powerful decline. The Great D Bank, site of the European Office in Management of the multi-dollar trillion derivatives, is on the verge of financial failure. It is the largest bank in all of Europe. All of its business segments are impaired and losing money in a hemorrhage. Furthermore, it is a big bond holder for Italian government bonds. The Italian banking system is in the death throes, which has finally been recognized. Their recent elections openly debated pathways in the face of banking system failure, which the jackass has been expecting for over a year in steady coverage with analysis. However, the bigger bondholder for Italian debt is France. Expect a massive bank crisis to emerge very soon that wrecks Société Générale and BNP Paribas, its 2 largest banks. Back in 2016, the hat-trick letter warned of very high non-performing loans among the Italian banks. The HT letter warned of rising government bond credit default swap rates. It is the insurance rate on a standard government bond, in coverage for default of the bond. It was this CD swap rising rate which warned at least 3 months in advance of the Lehman Brothers failure, kill job by JPM and G Sachs. But the contagion for the Italian banking failure is the main point. Notice that back 2 years ago, the French big banks had triple the size of exposure to Italian debt, versus the German banks. The Spanish and US banks will also suffer from the impact. The graph below is from July 2016. Global currency reset. The global currency reset has begun, hardly with fanfare and parades, or even formal public statements by the main players. Many are the events and steps toward the planning and execution of the reset, which will be very disruptive, and make the Lehman failure seem rather minor by comparison. The jackass has consistently called what comes to be the systemic Lehman event, since major sovereign bonds have become subprime in quality, kept sustained by central banks with their QE. Another better name for quantitative easing is hypermonetary inflation with debt monetization of the unsterilized type. See Zimbabwe and South America for the wondrous outcomes in national economic wreckage, poverty, and bank insolvency, just 2 examples. The jackass has been preaching for several years that the QE monetary policy has saved the big banks, or at least through bolstered official liquidity having bought them some time. But the consequence has been to render severe damage to the tangible economies. QE has essentially killed the economies. The feedback loop has struck the banks, which suffer great damage from the chronic recession which has never stopped since the year 2006. Business failures have combined with lower energy prices to cause a wrecking ball to hit the big banks. They also have been hurt by the rising bond yields for the U.S. Treasuries. The lie on economic growth has been about 5% to 7% every year, from severely gimmicked price inflation. See Shadow Government Statistics with John Williams for proof. Therefore, the true inflation-adjusted GDP has been -2% to -4% every year since before the Lehman failure. The reset is in progress. Many are its elements. Like the gold oil RMB futures contracts in Shanghai. Like the cross-border interbank payment system, CIPS, which will function as the swift alternative for Eastern nations. The entire Belt and Road Initiative forms a massive $6 to $8 trillion conference table of projects, mostly construction, all in the Eastern Hemisphere, and none conducted in US dollar terms. Many are the non-USD platforms under development, some of which have been around for a while like the BRICS Development Bank. Lately, a new piece has been put in the picture, with the BRICS Gold platform. My suspicion is that Turkey might soon play a role with it, in conversion of sovereign subprime, toxic, bonds like the US Treasuries and Eurobonds. Keep in mind that Italian government bonds deserve a 10% yield, like the Greek government bonds, except that the Euro Central Bank has been subsidizing these toxic securities. Two key events: an astute and very well-informed source with solid connections has provided important direction on the development. Timing is always difficult. He looks toward two key events that soon will trigger a global financial crisis, complete with a wave of reforms and solutions sought, all amidst great changes in financial markets. Expect a complete restructuring of the financial world we know it, as in debt restructure. The result will be a gold-centric financial structure, with central banks honoring finally the gold standard and the gold asset in banking reserves. The shift will be seen toward not only implementation of the gold standard, but also the Chinese RMB and possibly a key role for cryptocurrencies. Confirmation is coming from the mainstream media. During the systemic Lehman event, otherwise called the bust of the everything bond bubble, from QE², some sovereign bonds will be defaulted upon, with painful consequences from the failures. During the upcoming bust, certain entire national banking systems will collapse. At the same time, next-generation technology will be unleashed. It will be both disruptive to monopoly corporations, and society also. It will act as a wrecking ball to many energy companies who have suppressed the technology. In the reset, expect some hardline rules, if not games, exerted by the banker cabal, with respect to war on cash and negative rates. They will attempt to maintain their centralized power and absent transparency. The elders of China are driving the reset process, after having abandoned support for many key institutions of power in the West. A gold-backed Chinese yuan is anticipated as part of the new framework. In the upcoming chaos, tremendous changes will come, as part of the global paradigm shift. In the reforms and much-needed solutions, the suppression controls and shackles for precious metals will be shoved aside. The source has expectations of key events unfolding rapidly, with no prospect of much delay or favorable outcome for the US dollar, since gold cannot hold back any longer. Bear in mind the gigantic Egyptian gold investor, where something like 50% of his wealth was invested in gold bullion metal. The shrewd investors expect only PM to survive the big burn that comes, and not much else, surely not paper assets when the king dollar suffers its fate. The source is not certain how much longer the suppression of price and news can be maintained. It surely will not last another year, more like at most several months. Events are picking up in accelerated speed and breadth for the non-USD platforms. By the way, the source is not Santa himself, Mr. Sinclair. Then the source emphasized this. He awaits two key globally important events, which are set to occur. Nothing can stop them, and both will be powerful. He knows what they are, but is not at liberty to offer further details, very clear events in development. They are near-term triggers, which will release gold and silver prices. Once gold is released, silver will take flight. He stressed how the global currency reset will have some very visible unexpected aspects in a complete restructuring of the financial world versus its present form. He seems to be part of the planned restructure, planning, testing, and implementation, if not the upcoming crisis management. The jackass tried to guess on the key trigger events with Saudi oil sales taken in RMB payments. He was evasive but admitted that is a certainty already to occur between the Chinese and Arabs. My next gambit guess was to describe the development of non-USD platforms. He repeated that two key events are in the near-term schedule and progress. Before the jackass could mention the near-term chaos with Deutsche Bank and the entire Italian banking system, he offered more details, but still somewhat general. This will unfold as an event schedule sequence. He gave emphasis that silver metal was in dire shortage, the deficit growing worse with each passing month. Upon further reflection, the jackass believes a widespread shutdown of principal globalist cabal banks might occur, which would alter the entire global financial framework, and unleash the gold demand. The remaining banks could then replace a large swath of their US Treasury bonds, Eurobonds, UK gilts, and Jap government bonds in favor of gold bullion for the formerly held assets in reserves. The reset would then dictate how global banking systems must migrate toward gold and away from sovereign debt in their reserves management systems. The rising gold price in the following years would ensure the banks of healthy solvency. Or at least gold will aid the central banks in their struggle toward survival, which have made disastrous decisions in the accumulation of $9 trillion of toxic sovereign bonds just in the US Fed and Euro CB. Here are several potential key events to force a grand grotesque disruption. The others pertain to deep impact events, also certain to continue the disruption. The jackass guess on the two events are: first, a combination of Deutsche Bank failure with Italian banking system collapse. The second guessed event would be the introduction of the gold trade note, designed to sit atop the Shanghai Gold Oil RMB futures contracts, with the possible announcement of interchangeable Chinese yuan with the gold trade note in a caretaker temporary transition role. Be sure to know that jackass conjecture on the two key events is a much better descriptor, since guess seems flimsy flighty and conjecture seems educated calculated. List of potential key events: very serious major global game changers, Deutsche Bank failure, talk of restructure, with rupture of derivative complex Italian banking system collapse, complete with numerous bank runs, Italian sovereign currency announced as new lira currency in EU, exit London Metals Exchange, launches RMB-based metals contracts, COMEX and LBMA, rupture from lost control of integration with oil and currencies, formal launch of gold trade note atop the Shanghai GOR contracts, Saudi oil sales in RMB to China, adopted by other Arabs and other Asians, London flips east, with RMB hub development, following their AII bank membership, deep impact disruptions, flourishing non-USD platforms, led by Chinese design and efforts, Germans and French formally end Russian sanctions, thus flipping east, CIPS bank transaction system gains wider adoption, even among Western nations, BRICS gold platform announces conversion of sovereign bonds to gold, China pre-announces gold-backed yuan in form of convertible gold trade note, China announced yuan backed by basket of currencies, gold, other commodities, introduction of a new IMF SDR basket that includes gold, crude oil, iron, EU opens door to euro payments in external trade with trading partners, emerging markets, rupture on debt defaults, due to currency crisis, NATO fractures in the open and EU pursues independent military security, proof of monetary policy failure, the global reset has already begun. The US Fed has brought about a chronic slowdown in money velocity, which reveals the horrendous chronic recession. Damage has been done for over 6 years during the heretical QE monetary policy. The chart is only through end of year 2018. The malinvestments are hitting the wall. Add to the discussion on the bond market, aside from the US Treasuries, where much distress is seen. The US Fed cannot manage the entire asset-backed securities, mortgage bond market and the corporate bond market, let alone the high-yield, junk, bond market. Far afield is the emerging market arena, with scary damage. The quantitative tightening has caused severe problems already. It all seems like a scuttle project. Thus the new chairman of the US Fed is certainly not a banker cabal player, with no Wall Street experience. The following is from The Voice, with minor edits for flow. The chart is for data ending January 1. Chaos has entered many parts of the lateral portions from the bond market, but more visibly worse to the center of the tangible economy. It is all much simpler than you think. The velocity of money has slowed down dramatically, and in some sectors of the economies have gone close to zero. It is much like cutting off oxygen from a passenger jet, where the passengers suffocate. Refer to the Austrian School of Economics describing the crack-up boom scenario where malinvestments finally collapse. It is much like an earthquake-triggered tsunami. The entire financial and economic system is like a totaled car that needs to go to the scrapyard to be crushed. However, the banker cabal and government officials attempt to keep things going with plenty of music and ample propaganda. Not even wars will be saving the system, as has been practiced in the past. The entire global system is de facto in an intensive care unit watching the life support system screen. What is most fascinating for me to see, is the fact that everybody is waiting for the reset, whereas we are already in the reset process. It has begun. In all this cataclysmic turmoil lies an incredible opportunity. The fortunes ahead are in precious metals, and not paper assets. The gold and silver asset will survive and thrive since true money, while the paper assets will burn. The jackass adds that precious metals will do very well, but with a transition period of unknown duration, while the paper assets, like stocks, might have a final burst upward before major decline is witnessed. As a final note concerning the reset, leave it for another day to discuss restored stolen legacy wealth, debt forgiveness, end to global poverty, defanging the banker cabal, and disarming militaries. These are controversial topics loaded with political mustard, without much clarity or reliable information. Jim Willie, Gold Standard Requirements and Currency Crisis. The United States has 3 requirements in returning to the gold standard. They will be extremely difficult to achieve. They each serve as essential requirements in a criterion. All 3 are urgently needed. The challenge is formidable for the nation to remain as a leading player in the global economy. The United States stands alone in volume of national debt. Many place the blame on the social net like welfare, social security, and other measures. However, the biggest element is clearly the military budget, hardly for defense in the last 2 decades. As CEO Jack Ma of Alibaba stated so succinctly, the U.S. government has spent $25 trillion on the military with nothing to show for it except decayed infrastructure and global animosity for its aggression. A major item in recent years for the deficits has been Medicare, which is full of fraud and waste. Another major item is the raft of pensions like for government service, judicial service, and military service. Requirements for the gold standard eliminate the $21 trillion U.S. government deficit, source 10,000 tons gold to support the currency, reindustrialize to work down $600 billion trade deficit. Back in 2017, U.S. President Trump commissioned a study to verify the status of the U.S. gold reserves. He and Vice President Pence, who led the study, were shocked to learn that the Fort Knox gold had been stolen. Of course, such a discovery never reaches the national news in broadcast or printed form. Thus the long delay in any conceivable effort to set up the $1 trillion infrastructure program promised during his campaign for office. The gears switched to locating and rescuing the stolen gold, with dirty fingers identified for ex-presidents Papa Bush and Bill Clinton, along with the Wall Street crowd of criminals led by Robert Rubin. Rumors are ripe that the gold has been recovered, which also never reaches the controlled news networks. The eager await confirmation. The United States government cannot institute and implement a gold standard for its toxic US dollar in any practical form whatsoever, without first putting back into balance its trade deficit. The disastrous suicidal trend of outsourcing industry from the US base has resulted in a devastation to the urban centers, to a dilapidation to the infrastructure, to a loss of legitimate income, to a dependence upon debt for continuing the standard of living, and to a sick addiction to asset bubbles. Worse, the result has been an absence of bond investors for U.S. government debt auctions, to the point that QE bond purchase program has become a national fixture. The U.S. boasted for 20 years that Japan was a path not to be followed. But the U.S., true to jackass forecasts on both counts, ended up with 0% interest program and quantitative easing. The ZIRP resulted in grotesque asset misallocation. The QE with unsterilized hypermonetary inflation has converted the entire Western financial system into a global imprint of the Zimbabwe case, with reflections of South America. The United States must embark upon a national emergency program to form at least 20 to 30,000 new businesses every year within free trade zones in all 50 states. It should be treated as a national survival initiative in order to avoid falling into the third world. The businesses must be granted tax relief for 3 to 5 years at least, with respect to income tax levies and to property tax levies. The emphasis for the new businesses must be in export trade, in order to bring in foreign currency, so as to reduce the gargantuan crippling obstructive $600 billion annual trade deficit. If not executed with success, the consequence will be obscene and broad-based shortages, since anything not nailed down will be subject to export. That means agricultural output will be shipped out, resulting in food shortages. Gold treasure troves. The unique aspect of the current reset with respect to gold is the many reports of hidden large gold treasure troves. Behind the scenes for the last 20 years or more have been focused battles, complete with murders, downed aircraft, hired high-power attorneys, hidden projects, protected leaders, bribery by bankers, captured websites and false identities, confiscated income, and much more. History might someday tell the stories properly, but since such large scale, and so critical to forming new global boundaries, only the victors will recount the stories. Each gold trove is worth in the multiple dollar trillions for magnitude. In the Fort Knox case, only half $1 trillion. Any usage of multi-dollar trillion treasure troves brought forward for implemented usage, whether in fractional form, will change significantly the entire global financial structure. The Yamashita gold was hidden during World War II in the Philippines in mountain vaults. It could contain over 170,000 tons gold. It is known by many other names that include Eagle and Lily. Reports are sketchy, but the gold appears to have stolen by the imperialist Japanese during a century in occupation of China, complete with pilferage and mass genocide. The stolen Fort Knox gold was taken during the Clinton admin, with involvement by the Philippines once again. This time 1.3 to 1.5 million 400-ounce gold bars were recast and replaced by tungsten, bearing a thin gold clad. The principal victim in the fraud was the Hong Kong banks, which are being given relief in restitution on a monthly basis. See the U.S. Department Commerce reports under the strange ledger item of industrial metals and supplies. The gold treasure of Chinese white dragons consist of a network of elite families, whose wealth accumulation could stretch over a few millenniums, during several dynasties. They have a rumored 115,000 tons gold. Some of their bullion was leased to London around 50 years ago, surely earning some interest. However, the leased gold was improperly used to create the foundation of the Euro monetary union, complete with fraud aided by Goldman Sachs in betraying the Maastricht rules for entry. Around 30,000 tons gold was repatriated by the Dragons from London from March 2012 to end 2014, with the assistance of the Interpol Fraud Division and a crack team of attorneys. Old legacy U.S. Treasury bonds with gold-backed guarantees remain a big mystery. Rather than being treasure troves, they are the opposite. China appears as owners of the legacy bonds, which the U.S. government, in its usual inimitable style, continues to renege upon, using flimsy claims that the bonds are too old to be redeemable. The exceptional nation again is exceptionally dishonorable and corrupt to the core. The newest item perpetuates the deep intrigue. Ben Fulford has been stirring the global cauldron of golden soup with stories of the Mongol gold treasure, kept in Switzerland about 100 years ago, which was improperly used to set the foundation for the little nation creation on the southeastern end of the Mediterranean in 1945. Its dispute could be at the center of the hidden negotiations for North Korea. The tonnage volume is not clear, but it could be more than 20,000 tons gold. The entire unification of Korea could entail the formation of a Mongolian regional empire, possibly in the form of a trade zone, maybe even fortified by a new gold-backed currency. Expect the region to become a participant in the Eurasian trade zone, even while defusing constant nuclear tensions, which the Western cabal thrive upon, promote so well, and thrive upon. Just last week, the Indonesian government has wrested control of the biggest gold mine on the planet. The Grasberg gold mine is no longer under globalist banker cabal control. It has been the site of hidden warfare. The story unfolding should be very interesting. Its size is immense. The photo is impressive. Its 2016 year production, 1.063 billion pounds copper, 1.061 million ounces gold, and 2.9 million ounces silver. Its owner-operator is Freeport-McMoRan. Locations of currency crisis. The gold standard is often brought to the fore in solution to nasty currency crisis. They bring to the fore a sense of urgency to global currency reform like never seen in recent years. Never in jackass memory can so many locations be identified as suffering from active currency crisis here and now. From past experience, and from vivid accounts that even press coverage cannot deny, currency crises are always devastating. They bring price rise in chaos, supply shortage in chaos, business ruin in chaos, job loss in chaos, official policy in chaos, and a sense of lost control by government officials which breeds public uprising. The global locations are Venezuela, Turkey, Mexico, Argentina, Iran, and to some extent Russia. The solution is commonly trotted out as a gold standard for the currency, to reinstill confidence, to stem the monetary abuse, in new money creation, to execute the path toward restoration of balance, and to force discipline. What deep irony if the gold standard finds its initial rooting system in these secondary nations, only to establish some stability with clear view from the global stage. Then later in the next step, the gold standard can be installed and implemented on a more global basis in hundreds of countries. The true bane for toxic money is gold, which will strip the banker cabal of its global chokehold in power. The Turkey location is loaded with intrigue. In November 2015, the Turks unwisely shot down a Russian Air Force jet in the Syrian theater of conflict. The ensuing entanglement was ugly. The Russian response was cool, calm and collected, but it did result in a complete tourism boycott which harmed the Turkish economy significantly. It has not fully recovered. After peacemaking measures occurred, the Russians renewed the Turkish Stream pipeline which had been suspended. Russian President Putin never raised the stakes in the conflict. Then came the July 2016 failed coup of Turkish President Erdogan, a coup led by the United States and its NATO cohorts. Nothing about NATO has focused on any alliance toward security or stability in the last 20 years, contrary to popular opinion. Then came the ongoing NATO dispute over location of aircraft. Strangely, the Turks continue to depend upon Western aircraft, missile, and weapon parts, after 50 years of their participation. In recent months, the focus has been on the Turkish central bank for their stubbornness not to hike interest rates in defense of their falling currency. Their currency crisis continues. The Bloomberg Café con Leche Index, coffee with milk, tracks the price of a cup of coffee served at a certain bakery in eastern Caracas, their capital city. Its price has jumped to 1,400,000 bolivars from a base of only 2,300 bolivars over the past 12 months. The price increase is an astounding 60,770%. While the gauge is not as sophisticated as a conventional consumer price index, it has legitimate merits. It is tangible and tracked regularly, and provides a unique glimpse at inflation in the country. The Maduro regime continues in power, against the will of the people. Shortages are acute and growing worse, with the global spotlight at work. They suffer from shortages in rice and beans, from their export, in toilet paper, in condoms, and in a host of items. Despite stabilizing efforts by the Russians in oil operations and by the Chinese in debt finance, their currency crisis continues. Global reset has begun. The global financial reset has already begun. Many are the faces of the reset, especially with non-US dollar platforms. Two key events lie on the imminent horizon which will release the gold price. A trusted superior reliable source has indicated that two key events are imminent. The jackass guesses 1, the Deutsche Bank failure with Italian banking system collapse, and 2, the gold trade note introduction with Chinese RMB interchangeability. Expect the Chinese government short-term bill to possibly be equivalent to the gold trade note during an interim period, like for a caretaker role in transition. It will be used on oil payments. Expect the banking systems of Germany, France, and Italy all to enter a grand crisis. A list of potential key events is provided in the June hat-trick letter report. A second list of key disruptive additional events is provided. The QE official monetary policy has been a grand failure, keeping the big banks afloat, but while killing the main tangible economies in the process. The proof lies in the multi-year decline in money velocity, amidst supposed stimulus. Meanwhile, a long list of non-USD platforms has been developed for amplified usage. China has led the non-USD procedures, with the Belt and Road Initiative its primary banner. It boasts between $6 and $8 trillion in listed approved projects, all to be carried out without US dollar usage.